Hello, everybody. Today is Monday, December the 2nd, 2024. And this is Zacks Chief Equity Strategist and Economist, John Blank. I have a PhD from MIT in economics. And today, our subject, which we do every couple of weeks, is stocks. This week's the stocks we're looking at are the top ones in banks, finance, and insurance. In banks, we're going to look at the major banks and also the banks and thrifts that are a little smaller. And in finance, we'll look at the credit card companies a lot. And insurance, the story of the boom in insurance profits and premiums and revenues. So I titled this set of slides, Time to Follow the Money. Now, if you know my strategy of how to work in a given area of the US economy, global economy, I like three parts. One part is the top stops by market capitalization, just what the market thinks is biggest and most important. Part two, what Wall Street thinks is more important, the maximum number of analysts that are following the stock. And part three, what we've learned here at Zacks, following the large 1 month percent change in earnings estimates going forward the next 12 months. So that includes basically what the analysts are starting to upgrade and think is moving that will give us a different set of signals and a different set of stocks. So what are the stocks we're looking at? Today, we're going to look at these guys. I want to point out Banks Major is at 46, which is right here. Banks and Thrifts is 47, which is right there. Finance, which is right here. And then, of course, insurance down at the bottom right there. So let's talk a little bit about the names here. Banks Major, you can see a lot of huge market cap banks that are Chinese Construction Bank, the Industrial Commercial Bank. Royal Bank of Canada is in here. Agricultural Bank of Canada is here. HSBC, which is Hong Kong, Shanghai, Bank of China is in here. So a lot of gigantic banks tied to a gigantic economy, which is China. But also, a lot of Canadian banks have gotten quite big that you might be surprised to hear about. Down here, we're going to get into the thrifts, and you're going to get names that are around the United States: First Citizens, Huntington Bankshares, Regions Financial, Citizens Financial, East West Bancorp, First Horizon, Webster, Western Alliance, things like that. Well, they're smaller banks, much smaller. You can see their market caps are nowhere near as big as these ones. Then we'll get into these credit card companies and a lot of other things. Medley of things: American Express, Blackstone, Intercontinental Exchange, the exchange groups, Moody's Corporation, MCO. We'll talk a little bit about that, CME Group in Chicago, Capital One, and NASDAQ and Discover. So very interesting set of companies here. Down here, going to get into the insurance names. Of course, Berkshire Hathaway's in here. But there's Progressive, Allianz, Chubb, Marsh & McLennan, Zurich, Aon. Those are the big names. Now, over here, we've got our Zacks ranking list. You're going to see some names like HSBC that are common. SoFi is in here. We'll talk a little bit about it. And then there's plenty of other names that you probably don't have much knowledge of. This is where this gets interesting. Obviously, the market caps are all over the place, but their names are much different than here. Over here, in general, you're going to find names that you've seen before and know. Interesting because there are Chinese banks over here. They don't get covered here because they're not in the U.S. with coverage. So Fifth Third, Comerica, State Street, KeyCorp, Truist, and Bank of New York Mellon, M&T Bank. These are the names you're going to see from an analyst perspective. They're very different than over here. Over here, we're going to get the same kind of names: Region Financial, Zions, Cullen/Frost Banker, Huntington Banker, East West. So these names and these names tend to be somewhat similar because they're U.S. names. Get about the same coverage. Down here, similar story with the finance companies, basically the same names over here, and the same is true for the insurance companies. So the big difference here, not talking as much about the Canadian, Chinese banks that market caps are so big, talking about the coverage in the United States, and that's what matters more. So let's go on to talk about latest trends and developments in these areas. Here's the major banks. Here's the thrift banks. And I just want to point out, we can go around in a circle of all the different things that are going on. First of all, consolidation, mergers, private equity involvement, big issue for the major banks. AI-driven personalization, customer-centric services and personalization going on. Digital wallets and contactless payments, buy now, pay later, BNPL, alternative payment solutions, banking as a service, white label banking products, embedded finance, putting it inside other products, decentralized finance, that's blockchain, of course, DeFi solutions. Interest rates and lending practices. Of course, we've had rising interest rates and falling interest rates, and we've got digital lending. So those are not exclusive to Bank Manager, but that's the big ones that we pulled up here. Now over here, we got a different set of things. We got rising mortgage rates. A lot of lending goes on in the thrifts. Refinancing issues, community lending and affordable housing. A lot of issues here. ESG, sustainability and green lending. Regulatory changes, pressure, risk-based capital standards, cryptocurrency. So again, over here we have blockchain, over here we get cryptocurrency. Alternative lending, so fintech, we're going to talk about SoFi and a few other names, peer-to-peer, and then of course, interest rate sensitivity and growth in deposits on the interest rate experience. Over the last few years during COVID, it's been quite up and down in that respect. Okay, then we get to finance. Finance, again, you're going to see some various similar things here. Fintech and digital banking, blockchain and crypto, robo-advisors, of course, just the same kind of things. Financial inclusion efforts, wealth inequality. It's definitely something interesting from the finance perspective. That's a credit card thing, types of incomes and things going on. Again, AI and machine learning, big data playing a role in finance, credit cards. Growth of passive investment strategy. That'll be Blackstone and the ETFs. Federal Reserve policy shifts on rates, of course, regulatory changes after the post-COVID environment, like I talked, going to be important. So insurance is actually quite a bit different than these other three. So you're going to see a lot of different things going on here. Telemedicine, virtual care and mental health coverage for the health insurance providers. Integrated financial planning and life insurance innovation on the financial wellness groups. Cyber insurance growth, cyber crime, evolving coverage standards for it, regulatory changes at the state and federal level, and then, of course, climate change for the PNC group, cat bonds, and risk pooling, climate risks playing a role in this business. So we've got a lot of things to cover. Let's keep going at it. Number one, we've got top stocks by market capitalization. I always like to start here. These are the big names of big stocks, and it's really a good screening tool. Always choose the big stocks. That's where you want to trade and where you make the safest investments. So return on equity charts, the top 15 by market cap. So we have major banks here and the major thrifts. So I pulled out just a couple names. RY here, got a really nice return on equity. Who is that? That's the Royal Bank of Canada. They're the largest Canada bank by assets and market cap, and they're actually one of the largest in North America now. So RY is leading the way in terms of return on equity. Keep that in mind. IBN, probably don't know this one. This is ICICI Bank Limited. This is India Bank, started by the World Bank. So yes, it has been coming up. The return on equity of an Indian bank tells you a lot about the growth of that country. So the Canadian banks are doing quite well because they're expanding to the US, and Indian banks have the growth. There's other things to carry on down here. I also have Toronto Dominion Bank, ticker TD. That's here. It's another Canadian bank, a little different story in terms of its ROE. It's the same as Royal Bank, somewhere around 14 to 15 ROEs. Like ICICI, 15% ROE is about as good as you're going to do in the banking industry for this particular chart. Then we get finance. American Express at 32% ROEs, much higher. Rocket companies, you might have heard them there in Detroit, mortgage loans. And you can see here what an amazing roller coaster they were on because of the Fed rate hiking and cutting. I mean, again, when they started raising rates, they really plunged their business down. Now it's coming back. Tells you a lot about what's going on in the housing market just there. Brookfield Asset Management, huge ROE. They're not even in this type of business. They're in a totally different one, alternative assets. So American Express is travel-related services and credit cards. This is alternative assets, real estate infrastructure, renewable power, private equity credit, and this is mortgages, homes, loans, autos, all kinds of stuff up in Detroit. Down here, we've got our insurance companies. Just want to point out, Progressive, really a big name that's doing quite well lately. This is them that come back, big sink during the COVID, and then they blew up. Here's Marsh and McLennan, which is an insurance broker. Much more standard pattern. You can see a lot of different things going on here. All right, so price to earnings ratios for these stocks. I want to point out here, Bank of China is about 20. And down here, we've got Commerce Bank shares also about 19 or 20. So a PE forward 12-month PE of 19 or 20 is about as good as you're going to get out of these types of banking industries. This one, Commerce Bank shares, they're out of Missouri, Kansas, Illinois, Oklahoma, and Texas, based in St. Louis and Kansas City. Probably don't know them, but they've been, you can see here a nice pattern of the price to earnings ratio. Bid them up for a while, and then they went down during the rate hiking, and now they're coming back up. Over here in China, people are just not as enthused. This thing used to trade at 25. Now it's bound to 19. That's the bear market in Chinese shares overall that you're seeing there. Okay. Finance, Moody's really jumps out in terms of a forward P at 38. This has now become a growth stock, ticker MCO. Quick Buffett, that's a big play here. Credit ratings, research, data and analysis, software solution, risk management, quantitative assessment, credit training, credit process software to banks and other financial things. If you look closely, that orange line, they've been building up as a growth stock for some time now, over a decade. Moody's has been a great stock to know about. Down here, I've got Arthur J. Gallagher, and that's got a 28 ROE. What do they do? They're the largest property casualty administrator and an insurance broker. And again, you can see, other than this COVID period, they've been really building up a nice, strong growth stock in the insurance brokering business. AJG. Okay, total debt. This is just not as helpful as you'd like it to be. And this is depreciation, amortization, which will also not be as helpful as you'd like it to be. So let's get on to top stocks by market, not summer analysts. All right, first off, we've got the major banks. We've got Fifth Third here, Comerica here, State Street here, KeyBank here. Thrifts, I've got Regions Financial, which is out of Alabama. Zions Bancorp, which is Salt Lake. Cullen Frost Bankers, that's in San Antonio. And Huntington Bankshares in Columbus, Ohio. Just want to point out something about all these banks. You can see that they hit highs running into until the Fed started to hike rates, and then they plunged. And now there have been a really strong stock area in all respects. As the estimate revisions come up because the Fed is cutting now, or will be cutting, and inflation is lower, stocks have been rallying back to those highs. I just want to point out, really all it is, they're recovering from their losses over the last few years, and it's a mean reversion kind of effect. In many ways, you can see they're getting, and sometimes they're past. Huntington is, blown past. It's rare here. We've got Regions Financials also blown past. So that's a new development of seeing these stocks blow past those previous highs. Up here, the major banks, they're actually getting close there as well, but generally less. America is a good example. State Street actually getting close to the top. So keep this in mind. A lot of what's going on this year in terms of really strong financial stocks is they just get the wind at their backs because the Fed is now cutting rates and inflation seems to be no longer a concern. Okay, then we got finance. Those are credit card companies: Discover, Synchrony, American Express, and Capital One. Again, you've got really strong patterns way beyond the highs in all of these areas. So this has been a different business, and you can see some of these are really nice. This one, American Express, the travel card business, really went up, and they've been a strong growth stock for some time now. That's the pattern you're looking for. So it's pretty good, but this one's the best. And of course, Capital One is having a little struggle lately, as the rates get cutting. Why is the stock rallying? Hard to say. Have to look into it. Now, this is amazing. I mean, down here in insurance, look at these bull markets that have been going on at Progressive. Just amazing to see how strong that stock has been Travelers, the same thing. Willis Towers Watson out of London. Willis Tower, of course, in Chicago. And Allstate. Allstate, another really classic pattern that had a lot of trouble during the COVID pandemics, of course. Now they're coming back strongly the last 2 years and going out to 2026. So all these insurance companies look really strong in this environment. Okay, major banks earnings per share. M&T Bank right here, MTB, has been really building up its earnings. They're out of Buffalo, New York, and they've been 1,000 domestic banking offices. And MTB, get up, see here, they're making $16 a share in 2026, $15 a share next year. Just an amazing story here. You can see they're building that EPS up. This is really interesting to know because you would not think this would be the major stock we pick up on in major banks outside of China. Here's Royal Bank of Canada again. Very similar pattern of building up their EPS. Now they're up to $10 a share. BMO, their competitor, Bank of Montreal, is also at $10 a share. So very strong Canadian performances. And of course, down here, we got things like East West Bancorp out here in California at almost $9 a share. Bank Ozark, $6 a share. These are really strong earnings per share numbers for a lot of banks. Okay, then we get the finance companies. Discover's over here again. Like I talked to Synchrony, it's going to be in their Amex. Here's Capital One Financial. You can see here they had a big run up and now they went down during the rate hiking. Now they're coming back up with the rate cutting. The CBOE, the option exchange, is really a remarkable story of earnings. They're up to $10 a share on electronic trading of options. Really big story with Travelers, ticker TRV. They're just exploding the earnings, well up to $20 a share at Travelers. Progressive, also similar story. Where do we find them? I don't see them here. There they are. $13 a share. And again, the big swoop, but now they're back up. Of course, a lot of other names here to take a look at. Net margins against the major banks. There's MTB. We talked about MT Bank out of Buffalo. Here's first, fifth, third. They're both at 16 and 17% net margins. The one in Canada, 12% net margins. So again, you may not think these regional banks have stronger net margins than something like a big Canadian bank, but they do. East West Bank is even better, 25% margins. Bank of the Ozarks at the top, 26% net margins in Bank of the Ozarks. Interesting to know why they're doing it or how they're doing it. Finance companies, here's the CME group at 57% net margins. I mean, if you want to talk about electronic trading being profitable, there you got it's just screaming at you. Aon and Marsh McLennan are down in the 17% ROEs. So CME group is no comparison. However, if you get into the credit card companies, Discover, Capital One is at 8%, very low. Discover's at 14%, American Express at 13%. Not as strong net margin I'm sure they get if they book a lot of losses on those credit cards. Total debt to capital, we're going to skip. And we're going to skip CapEx to depreciation so we can get on to the Zacks Rankiness. Talk about this largest percentage change in estimates. And the first thing we're going to look at is finding something that's interesting. I got this FFWM company that has been coming up for the last 10, 12 years. They're out of Irvine, California. They're in two segments, banking and wealth management. You can see all the different products here: Visa debit card, sweep accounts, insurance brokerage, and portfolio management, financial planning, advisory, consultation, wealth management. This has been, down in Orange County is doing well, so they're doing well. FFWM. Take a look at that ticker. Up here we got HSBC and UBS. I just want to point out, obviously huge revenues, and they basically are doing quite well. UBS has come back quite well from the pandemic, and then that's the bump when they got the purchase of their competitor in Switzerland. Down here we've got HTH, Hilltop Holdings. You probably don't know that ticker, but they have come out of nowhere. Very small business, but they're worth knowing about, ticker HTH. All right, here we've got Two names in California, one up in Palo Alto, SoFi Technologies. That's them, and they are really building the revenue. And they're starting to get the earnings up. I mean, their earnings up basically in positive. I mean, this is 24, they're basically just becoming positive, and then 25 and 6, they hopefully will be positive. But they've been building the revenues up. The worry here is Loan Depot, also out of California. Mortgage, you can see they just got hammered when the Fed raised rates, and now they're coming back as they're cutting them. So it's worth thinking about business mix here. SoFi's technology is a very different business mix than Loan Depot, which is clearly home mortgage driven. All right. Allstate, right there for insurance. They're just building that business, and they have been doing it quietly for 15 years quite well. Cash flow yield, we're not going to talk a lot about this, but you've got a lot of names here to look into, and it's worth studying it closely, as well as this. Here's SoFi, cash flow yield's fairly low. There's 2.3. There's LDI, Loan Depot. They're actually negative cash flow right now. You got to worry about a bank like that. That's something to be concerned with. A lot of other names to take a look at here. Enterprise value to sales. I just want to point out another name that came to light here, ticker FSFG. They're down here, right there. And this is First Savings Financial Group in Southern Indiana. Again, this is one of those quiet little banks that's been bid up to a much higher value to sales than any other bank down here. They're at a 7. And that is quite dramatic versus UBS at a 3. HSBC is negative. They've got a few other names over here, and of course, a lot of them down there. Basically, point out here, you definitely don't want to see negative names. And you can get some really strong names to find, and I basically would bet that the stronger names are the ones that are doing better in their businesses. Enterprise value to sales here, and then they get to this last one. Here's the price to sales across these 4 industry groups. Here's Bank Major, that's the blue line. You can see that they've been, fluctuated a lot. During the pandemic, it went down, recovered with the QE, then went down with the rate hiking, and then went back up with the passive inflation and everything else. So it's basically, like I said, just a recovery in valuation of bank stocks to their highs, and they're basically fully priced now. Keep that in mind. Banks and thrifts are no different. They are also now back to their highs and fully priced in this 4.4 area. A price to sales. So I want to just point that out, that all we're getting here is probably the end of the valuation expansion in the thrifts and the banks. Down here, you've got a different story. That is the insurance guy, and they are breaking up to a new high here, a 2 for them. That's pretty strong. And again, I might be a seller of my insurance companies as well as the banks at these strong levels. Finance, exploding. Price to sales ratio, credit card bonanza. I think I want to point out here, I've circled these 2 things. Sometimes, you get very different types of businesses that trade at different levels. Liabilities, of course, are all at the big banks, and they're not as much at the finance companies, which are credit card companies. And then in the middle, you've got insurance because of their books that they have behind a lot of their insurance, and then the banks and thrifts are much smaller than those banks. Here again, you get a quick ratio, very different for insurance than the banks. Just notice how different that is. These are 2 very different businesses. That's all I want to point out. Okay, and this one we've got earnings pureness. Again, insurance and banks, very different. Over here, you get return on capital. You've got the banks and the finance companies, the banks and thrifts and the finance companies here, and you've got the major banks and the insurance companies there on return on capital. So you can actually see something very interesting here. The banks and thrifts actually do quite well. And the finance companies do quite well on return on capital basis, and not so good with these conglomerate groups and different businesses that are focused on insurance. Again, here, earnings pureness, that's just insurance and all the banks and finance companies. That's telling you, again, the business model. Quite different. Okay, that's it for me. Thanks for attending. I am the Chief Equity Strategist and Economist at Zacks Professional Services, is where you can get these slides. And you're going to need these slides to talk about this more coherently and pick these stocks. Get into our systems and understand things. Give us a call, 866-794-6065. send us an email, strategycall@zackspro.com, or find us on the web, www.zackspro.com. So what I've got for you today, again, I really think we followed the money through major banks, banks and thrifts, finance companies, and insurance. And there's lots here for you to pick better stocks and make better portfolio decisions for investments. 866-794-6065. Strategy call at zackspro.com, or find us on the web, www.zackspro.com. Thanks, everybody, and I hope you enjoyed this.